A key inflation report on Wednesday showed that U.S. consumer prices in November increased the most in 7 months. But that's unlikely to keep the Federal Reserve from delivering a third consecutive interest rate cut at its policy meeting next week. The annual inflation rate through November, according to the Labor Department's Consumer Price Index, was 2.7%, a slight uptick from October, but in line with economists' expectations. Most of the rise came from higher food prices, as well as more expensive motel and hotel rooms. Rents, which have been the major driver of inflation, increased at their slowest pace since July of 2021. That bodes well for the overall inflation outlook. Inflation has slowed considerably from a peak of 9.1% in June of 2022. But progress in lowering the annual rate to the central bank's 2% target has stalled in recent months. The Fed, however, is now more focused on the labor market. Though job growth accelerated in November, the unemployment rate ticked up to 4.2% after holding steady at 4.1% for 2 consecutive months. Financial markets have almost fully priced in a quarter percentage point rate cut at the Fed's policy meeting next week. Fewer rate cuts, however, are expected next year than had been anticipated just a few months ago.